In terms of the fundamentals, the numbers are looking better, right? Manufacturing improving, some of the economic output indicators going in the right direction. As you said, we're in a consumption downgrade cycle where people are still buying some consumer discretionary, but less, and they're going to more domestic brands. The QSR restaurants might be full in Beijing, but the bars are not. So those kind of second-tier discretionary items are still not being purchased. It feels like we've hit a bit of a bottom, but you can never say if the U.S. announces further sanctions and that negative news cycle continues, foreign investors could still continue to flee the market.
You wouldn't need to go to a bar if you can just buy a multi-latte from Luckin Coffee anyway, 8 o'clock in the morning. Start early. I do want to talk about some of the support measures we've seen coming through, because the sort of perception in the market is that they've been quite piecemeal. Tani and I were just talking in the last hour, and it's been not big bang stimulus, but sort of step by step. And I suppose it's like a diet. When you're snacking all day, you eventually get fat. It will add up to the bigger picture. Yeah. Exactly. What does that mean for the markets if it's sort of just bobbling along, like a sort of W-shaped recovery like that?
Yeah. There's been a drip feed, and I think the perception from the Chinese regulators was maybe they could organically manifest their way out of this by reopening the economy and teasing stimulus, and that simply hasn't happened. Even small kind of rallies have died off very quickly, and so our expectation is they'll continue to lower interest rates, probably 10 basis points by the end of the year. They'll continue to provide stimulus, spending packages, anything they can do to bolster it, but it needs to be robust and sustained. It needs to be forecasted and executed upon, and not drip fed, and with this expectation they can test the waters and things will work out.
How many quarters before we see the light at the end of the tunnel?
I think we're in a counter-cyclical environment, right? So we saw the U.S. markets crashing last night off the news around interest rates perhaps not being lowered over the coming year or so. China in some ways should be cyclically in a better position than the U.S. because we are kind of coming out of the valley at a different time where the U.S. might be peaking, particularly on the public market side. So our expectation is we'd start to see improvement in kind of Q1 of next year. But again, it's got to come with that sustained stimulus.